Hey, it is Brian here, and today is Wednesday, the 4th of January, 2017. The S&P 500 continued higher here today after yesterday afternoon strength. They got it back above that five-day moving average, and we did, of course, break that downtrend line that we had been observing, as well as the volume-weighted average price from the recent peak. So buyers are clearly back in control early in 2017. Right now, we've got a little bit of potential resistance here horizontally. I think it'd actually be a very good thing if we were to pull back and create a shoulder that would go along with this left shoulder that we see here and this head. So I think that the favorable strategy or scenario from here would be for some kind of pullback, maybe down towards this level, and then for it to be able to continue to break higher. The fact is, the buyers are in control, and hoping for a pullback isn't something a trading strategy. But if we see it, I think it would set up a potential buy scenario. If it were to hold above one, I think we want to see the week to date or now year to date volume weighted average price, which is right around in this area here at about 225.50. So if we were to pull back, about a point or so tomorrow, stabilize a little bit, then move higher again, I think that would be viable. Right now, we have the low from earlier this year, and then we have, of course, this higher low, and that would create another higher low, which again I think would be favorable to see because it would then give us an inverted head and shoulders pattern with this neckline here. And this has been resistance, a little bit of resistance here over the last couple weeks. So a little bit of a pullback would be a pause that refreshes. But the fact is, we remain in a longer term uptrend, and getting those pullbacks is a lot of times just something that you hope for but doesn't actually occur. So if we can pull back from here, I think that would be the most favorable scenario. The Nasdaq, for its part, continued higher here as well today. So we saw a little bit of a shakeout, late last year as it got down below this band of support, which had been, of course, the bigger prior resistance area. That is now looking more just like a shakeout, and of course, the buyers are back in control with it above the rising 10, 20, and 50-day moving averages. Longer term on the weekly time frame, again, we've got a solid bull market here, and just pulling back is not enough reason to sell short unless you're very short term oriented. The 30-minute time frame we can see here, we've come up back above this level. So what that means now that we're back above that 119 and a half, 119.75 is the people that shorted below it or that sold their long stocks are now regretting that and have the potential to add demand for this market. Now, let's switch to a 15-minute time frame. And of course, the time frame that I like to look at the most is the intermediate term time frame. But we have to consider how it fits into that bigger picture as well. For tomorrow, I think because we have a declining five-day moving average, I'd really like to see this market pull back a little bit too, perhaps into this range. And wouldn't really be good to see it getting below 119 and a half. That would be a little bit of caution. It wouldn't be bearish, but if we were to get down towards that 119 and a half and pull back, I would then be looking for potential strength to be purchasing the Nasdaq. As again, this market is in a bullish market on the weekly time frame, as is the Russell 2000. Of course, the Russell 2000 on its daily time frame broke this little downtrend line. So we've been seeing that this market has been pulling back slightly, very shallow pullback over the last couple weeks. Got a couple people worried as it broke below and closed below the 20-day moving average. And for our part, we were a little bit cautious in here with the market below declining five-day moving average. This is obviously the key level, 134 and a half, 135. We've got some distance between us and that level right now. So that should be able to, not be really of much of a concern at this point. If we were to pull back all the way down towards that level, I think it would find support once again because we've got a nice cushion below it. But on the upper edge, we've got this little band of resistance up in here that we're coming into. So same story. I'd like to see some pullback, perhaps down towards 136.75 to 137, and then that would perhaps give us some energy to be able to build for a bigger breakout that could continue. Although, the ball is in motion, it's moving. The pattern is higher highs and higher lows above the rising 5-day moving average. So, waiting for a pullback, often you're going to get left behind. So it comes down to risk management and what your time frame is. The semiconductors are the group that continues to be the little bit of a laggard here. They outperformed considerably last year. They are below a declining 5-day moving average, which tells us we don't want to be involved from the long side on the intermediate term basis. But the longer term trend is still significantly higher, and I just don't think it makes sense to sell short unless you're a super aggressive trader, looking for the shortest of time frames. The biotechs, this group did finally get back up above that volume weighted average price from the beginning of 2016. So you can see we're back above that, and we're actually just at the 150-day moving average right in here, and the 100-day moving average. So when we drill down to a shorter term time frame, we did get up and through this little what's been the band of resistance. So we used up some energy getting to that level today, and the same story here, especially with a broken market overall with a declining 50-day moving average. I'd like to see maybe these biotechs pull back into here, hold about 274 to 275 successfully, and then be able to continue to move higher. I would not suggest chasing up here. If you are, making purchases up in this area, you've got to have tight stops somewhere, up in this type of area. Today we had some decent stocks in the swing trading. We got involved in Autodesk right here at 70, what was it, 76.36. So we'll be looking at that one for continued upside tomorrow, as that one has a nice looking daily chart. We also got involved in SC, which is starting to continue to move higher after that consolidation. So nicely timed trades in those and in SEIC. SEIC, I typed it in wrong, but SEIC is moving nicely higher as well. And for tomorrow, we've got some great looking stocks too. So I'm running a special on Alpha Trends. Please take a look at alphatrends.net, and hopefully there's something there that I can help make you become a better trader in 2017.